Today is the 37th episode of the Advisor Tech Book Live podcast. My guest today is Catherine Tindall. I almost said host. My guest is Catherine Tindall of Dominion, and she helps. Well, I'll let her say what she does. What's your area of expertise?
So I am a CPA and I specialize in working for advisors as their tax counsel for their own firms. So that's what we do.
That's really cool. No, I was thinking about like my own business as I was getting on, and like I know my QuickBooks are like months behind. I know how to like run QuickBooks and I know how to
Yeah.
run spreadsheets, but when it's not a priority, it just falls behind. And I'm like, at some point, I either have to block time or outsource this.
Yeah, and that's a lot of what I help advisors work through initially because my perspective, at least like looking at my industry, traditionally what they do is you come to a CPA, hey, I need this tax return done. They do the tax return, they tell you how much you need to pay in taxes. They give you some like little vouchers for next year and they say, bye, see you next year. And for a lot of people that are just like simple W-2s, that's totally fine. Like that works. They don't have a lot of dynamic things going on in their business. They also don't have a lot of planning opportunities because the tax code is not really written for employees. Is written for business owners and real estate investors. Like that's where a lot of the activity is. And so basically what we do that's really different is like I start out with going through a lot of that foundational stuff because a lot of times I'll find the reason why tax planning it hasn't been happening and can't happen is because the underlying infrastructure of how the business owner is dealing with their own financials isn't set up correctly. Like it's just not working. Um, and then once we address that and get timely, accurate financials, then we can look into the future and do other things. But until we've got that historical data to at least give us benchmarks and then also give us the basis for like doing tax returns and stuff like that, you're really not going to be able to be, okay, well, let's make a budget for next year and let's see, like, okay, I want to try to grow by X number of clients with X number of AUM. Like, let's model this out. What's this going to look like? What if I fall short? What if market performance is different? Like, what if I bring on an employee? Like, what are all these things going to look like? And then how much taxes am I going to have to pay? Like, we can't do any of that unless we've got, basically functional financial statements happening on a regular basis. So that's
Yeah.
why I usually just start there because it's an easy fix. Like you said, you either have to really commit to doing the function yourself or outsource it for pretty much everybody, unless you like this sparks joy for you and you enjoy doing it. When you calculate the value of your time, it's not worth doing yourself, because you don't have systems to do it efficiently or correctly. It's not a profit center, it's a cost center. And so if it's extremely simple and it would be more expensive to try to bring in somebody external, like, maybe in your case, if it's a fairly simple, chart of accounts and things going on. But for most people, like just getting it outsourced is going to be so much more efficient if you've got the right person doing it, where they're basically going to be independent. It holds the function accountable too, because when it's just you as an owner, it's like, oh, okay, like yeah, I got to do the QuickBooks, but I got all these other things that I want to be doing
Yeah.
instead, which you should be. Like when you procrastinate a task, that is a signal that you probably shouldn't be doing that task, because you don't see that it's valuable and it's probably not, it's not valuable for you to do it. So I usually just tell people like that's the first place is just if you're doing it yourself, unless you really enjoy it or it helps you feel like you're in control and understand what's going on, which I have some advisors who do their own books and that's it, is that they just want to have their hands in it and they're good at being timely with it. They don't mind doing it. It's not that complex. Like they're a single owner with maybe a single employee. Um, it's fine, but I always just you got to have that mindset around it of just like if this thing is not making you money, so you really, you should be trying to leverage your time as much as possible into how you're actually going to get returns on your time. And if you're looking at like, yeah, I spend a Saturday every week cleaning up my QuickBooks. It's like, man, if you spent a Saturday every week working on lead magnets and your marketing funnel, like what would that do for your business versus just doing your books, right? So that's my perspective on it. And it's really a fundamental area that I think a lot of people don't realize how important it is to just get that buttoned up and get it formalized.
Yeah. So, like, basically, what's the difference between bookkeeping? Let's say I would love to talk about actual tools if you're into that,
Yeah,
like
yeah, let's do it.
QuickBooks Zero. There's some new stuff coming out. but like bookkeeping, accounting, and then whatever you call projections. I don't know if it's called like FP&A or something, but
Yeah, it's FP&A, but that's a bit
what are
fancy
the
for this crowd, yeah.
do you work across all of those? Like, do you help with like transactions and chart of accounts and all that, or do you have a specific focus?
So we don't do that, but when I start engagements for firms, I start by looking at what they've got for an infrastructure there and figuring out like, is this appropriate for their firm level? Because most of the time, if they've been working with a CPA, the CPA will just take what they're given and turn it into tax returns, and not really put a lot of thought into, you know, this. The accounting system is the engine for your visibility into your performance. It
Yeah,
is, it whether you're doing well or doing poorly, it's going to show up on your financials. Now, it's not the full picture because a lot of the lead metrics are things that are not going to be trackable at a financial statement level, but the financial statements are the fruit of your efforts. And so you need to be, it's good to be in tune to what's going on with them. So you have a bookkeeper that's going to handle transactional reporting. So that's going to be things like entering in your like transactions from your bank statement and from your credit card. The nice thing about a lot of the tools that are now available versus like even 10 years ago, like QuickBooks Online, you can program bank rules. So basically, every transaction that's Amazon, it's office expenses. And like
yeah,
you can just program it to do those things so that the bookkeeper's time is really, reduced. But the tricky part a lot of times with finding a bookkeeper is the difference between a bookkeeper who can report transactions is different from an accountant who knows how to look at the financials and say, hey, this account is not right. Like this, the way you classified this isn't right. Or if you have activities that are things that wouldn't be like transactionally reported. So for like a lot of advisors, what that means is if you purchased a partial book of business from somebody else, that's not going to show up in your bank feed, but it's got to show up on your books. Or
sure,
it's a lot of stuff like that. If you have depreciation expense, like that's not going to show up in your bank feed. So you need, from a bookkeeper's perspective, they're handling transactions. And, the more that that person is competent, they'll be using auto feed rules. And the more that they're competent, they should actually be looking at the outputs that are produced in the financial statements and looking for issues there. Most of the time, like bookkeepers I've worked with over the course of my career, it's very variable how much expertise that person has. And so that's why it's important as well. Like as a CPA firm, what we do is like when reports come into us, there's certain things that we're going to check against externally to see like, okay, this is how much revenue you made this year. But when I look at all your 1099, like I look at your LPL 1099 and your insurance commission 1099, it's like these numbers don't tie out.
yeah,
That shouldn't be like that. So who's wrong? Either the 1099 is wrong or your QuickBooks is wrong. Most of the
right,
time, it's your QuickBooks that's wrong. Sometimes the
sure,
1099 is wrong, but it's a lot of that kind of thing. Is comparing against externals, and just making sure that for most people, they're used to okay. Well, how complicated is accounting? I get money in and then money goes out, right?
yeah,
It's more complicated than that because we have to have a system that balances on both sides, and so that's why it's important things like reconciling bank statements, reconciling credit card statements, reconciling loans, doing the adjusting entries that come from the tax professional for things like your equity section and just like all of those other things. It's important to have an integrated system. Just to give you an example, like I was reviewing a case earlier, it was actually yesterday, where the prior accountant wasn't picking up things correctly because of the bookkeeper actually was doing an okay job, but if the bookkeeper had been competent, they would have probably caught this. The tax professional was costing this advisor, it was going to over the course of 2 years was going to be $100,000 in tax for
wow,
just a couple of adjustments.
yeah,
um, so a lot of it just comes down to you need people that know how to run the systems rather than okay, what's going to be, the best tool? Like you need an actual like infrastructure beyond just QuickBooks around how the function gets managed, because especially for advisors, I would say less so like for, um, you know, like in creators or like, like I work with some coaches in the industry where you don't have like complex activity going on. For advisors, it's a different story because we've just got like their revenue earnings is so weird, but
yeah. No, that makes sense. So do you work with like bookkeepers and then you kind of take over when it gets to accounting? Is that how it works?
Yeah, so, like, they're responsible for getting the transactions in correctly, like, all those trips to Starbucks,
Yeah.
things like that, getting that stuff logged. But then when it comes to making sure, that the financials are ready for the tax returns, that really comes back into our camp. And then we look at things like, basically it's a balance sheet review because accounting is like a two-sided system where if your balance sheet is correct, your P&L is basically going to be correct. And it's easier to verify the balance sheet being correct than it is to go through and look at each single transaction on a profit and loss statement. So that's the way we do it. Um, it's actually a good question if you're ever interviewing a CPA, ask them how they review that stuff is correct. And if they
Okay.
don't say, I do a balance sheet review, then it means it's likely that, they're just taking what they get from the bookkeeper and just popping it into a return, which,
Okay.
if you only pay them, maybe, if you don't pay them very much for the returns work to be done, that is all that they're doing. Um, so it's a common issue. And then once you've got those financials that are in a good place, then it gives us a baseline to actually start doing projection work because we say, okay, last year you made this much and you've got all these adjustments that change your taxable income. This year, like how are things going to change? And then we just look at the big levers, right? Like how is revenue going to change? How much is dependent on things that you don't have control over, like commissions kind of income where you may or may not get it versus AUM where unless there's market changes, it's pretty consistent.
Yeah.
And then we look at the main expense levers, which are going to be things like occupancy, if you're going to change where you're located. Biggest one is payroll, for most firms. And then, after that, it's just all the de minimis stuff like software, which is expensive, but it's predictable, versus other things like payroll. If you're going to add on a whole other staff person, it's like, all right, oh, there's another 100,000 or, whatever it is. That's a big, each small change is actually a big change on your financials. And then once we've got that, it just turns into, okay, how are we doing against performance? And then you update how you're paying your taxes based on that. And then you just update, future projections based on that. Like I had an advisor email me earlier today that what we had done for projections for his revenue for this year, like in Q1, he's already way exceeding it. So we know, oh, you're going to be underpaying your taxes. Like we need to redo this again because you're outpacing the performance that we thought you were going to get. Those are the emails I like getting.
For sure.
um, but sometimes it's not like that. Sometimes, hey, we're falling behind what we were projecting, and whoa, we need to, you should be paying in less, and we don't want to prepay anything. So it's important to get the function right, especially for a lot of advisors when they're first starting out. Um, it can be extremely painful when they don't have this dialed in, and all of a sudden they get an email from their CPA, hey, you owe 50 grand in 2 weeks. Nobody likes that situation. But then on the flip side, as they continue to grow and you get into those top brackets, it's just a lot of money. Even with all the best planning we can do, it's just still going to be a lot of money that's walking out the door. And so there just needs to be a good function behind it.
Yeah. Yeah. So let's talk about the tools a little bit. So obviously, I
Yeah.
think QuickBooks is the most popular. Then there's also Zero, which is gaining popularity a bit. But now there's like new AI tools like Puzzle, and there's others as well.
Yeah.
Um, do you mainly still see QuickBooks? Is that like the number one
Oh,
thing you
yeah.
see? Or
Yeah. So most people like I still see people on QuickBooks Desktop, which is shocking to me because they don't
yeah.
have like the bank feed abilities. So if you're on QuickBooks Desktop, unless there's some esoteric reason in which if there is, send me a LinkedIn because I'd like to know, DM, I'd like to know about it. But for the most part, if you're on desktop, switching to online at this point is what vast majority of people have done, just because of those automatic rules make it so much faster for the transactional reporting. It also makes it a lot easier for other people to collaborate with you. So if you have an external bookkeeper, if you have an external CPA, we're just able to go in there, pull all the reports we need, and you don't even know that we've been it. You can see in the audit log, but we're not having to like email you back and forth, like, hey, we need this report. Okay, we're like, actually, we're going to need this other report too because we found another issue. It just allows us to work in the background and makes a lot less noise. So I always recommend QuickBooks Online for the smaller advisors. Like as you get bigger and more complex, you start looking like at enterprise kind of systems. But for most people, if they're in the sub 10 million revenue category, um, QuickBooks Online is going to be totally sufficient. The only thing that can put a caveat in that is if you're having to file in multiple states because you've
Okay.
got state nexus issues. Most people do not, but it is something that does come up, especially for advisors where they travel a lot to different places to their clients. This can come up, but for the most part, QuickBooks Online is totally fine. I've looked at some of the AI ones. I would say the main thing with this function is that you just need people operating it that you can trust the competency level of them. And where I'm excited with what's going to be happening with some of these AI platforms, I think for most advisors, like my main goal is we just want to know that the data is accurate. And then we also want to know that the function is being handled competently. And with those AI tools, like it's just much fewer professionals who are able to work on those platforms.
Yeah.
So, if you're trying to outsource the function, like I think probably over, like if you've got like a really tech smart internal person, that wants to learn one of these platforms, it's just you don't want to have a you don't want to get into a situation where they're using one of these tools, they're not doing it competently, and then all of a sudden you're getting financial data that's inaccurate. And you can run into issues like, oh, I thought we were profitable, but actually we're not, or it's just because it's such a critical function in the business. I'm a little skeptical of tools like that unless you have somebody that's really understands how accounting is supposed to work from like a traditional perspective and then implementing them. If you're just going to take like a remote VA who has like some transactional entering experience and throw them on the AI tool and hope that the AI is going to be like competent enough, I don't think that that's a good strategy for right now. But what it just really comes down to like who's handling it and how much do
Yeah.
they understand about how these things should be working, because I find for most people that are either at the bookkeeper level or advisors doing it themselves, they don't understand enough the fundamentals of like how accounts are logically related to each other. If I do this thing here, how is it going to impact things over here? And really understanding how accounting as a like logical system outside of software, because it's a logical, like you could make an accounting system on paper. I've done that before. Like I did that in college. It's all logical relationships. And so if you don't understand how those work, it's hard to verify what you're getting as outputs from those kinds of tools. But I think they're great. I'm like looking forward to, the market having to compete against them. Um, you know, People always tell me like, are you concerned that your industry is going to get, annihilated by AI? And I'm not worried about it at all. It's just going to make us a lot more efficient. But it's like the same for advisors, right? Like you can't
Yeah.
replace the human intuition and human logic. Like, until we get generalized AI, which maybe that's going to be, general intelligence. Maybe that'll be different, but at least in my dealings with it, you know, it's like a semi-competent staff person.
I mean, it's interesting, within advisors, maybe 80% are decent and then 20% are excellent. And I think
Yeah.
that fake intelligence, I like to call AI fake intelligence, is going to really shine a light on the people that actually are doing a really good job. So
Mhm.
maybe it's the same in the CPA world. There's like 80% that are okay, and then there's 20% that are like truly excellent.
Yeah.
I think that the okay people are going to struggle a lot because
Yes.
their value is going to be destroyed. Basically, it's the ones that are excellent that are going to really stand out. Um,
Yeah, I 100% agree. Like, it's the people who are like, really competent, it's just gonna magnify their ability to, produce good work. Like,
yeah,
that's been my experience with it, and then the people who are less competent and able to function within very established systems, this me talking my own industry, they're the ones that are gonna be extremely disrupted because they're not gonna be able to upskill, to
yeah,
learn how to use the tools. And then also I find with a lot of them, like, they're just not, I don't wanna say competent, but it's like you have to be able to think in multiple dimensions at the same time when you're doing the work, and then especially where I think all professional services industries are going, it's like everything's gonna be pushing more towards concierge, more towards holistic and integrated, boutique, like, that's just the direction all of these services are going to end up going because anything that's commoditizable or systemizable that human beings are doing, we're gonna be able to get the AI to weed out a lot of, that kind of routine, like factory style, advisory work that goes on.
yeah. So when all the transactions are in and categorized, and then all the balance sheets, profit and losses, and the statements are all up to date, what do you go to do the projections? So where you can run those, hey, what happens if we hire 3 employees next year, that kind of stuff. Does QuickBooks have tools around that, or do you go to like a live plan or something?
So we actually just take it we just, we just use Excel for it, honestly,
Okay.
because it's
That's what I do
um
too.
yeah, because it's simple to make it do exactly what you want and then also
Yeah,
to modify things around. I think as a first step that I like a lot of advisors to do is make sure that their profit and loss statement is actually structured correctly, because a lot of times when they get in there, they'll have their gross revenues and then it'll just be all the expenses, and that's the way they look at it versus, having making sure, like, especially if you've got revenue that comes in, but it's already net of fees that you pay to different platforms. Like, this is especially true for people with broker dealers. Making sure that the fees are actually reflected in your QuickBooks, even though they never hit your transactions, just because you want to know how much you're paying for that, right?
right,
And you want to know what your actual profitability is, and what you pay for platform fees impacts your profitability. Even though it's net and you don't see it, you want to know what it is, right?
right.
So, like, that should be called out if you've got any of those platform fees that are netted from revenues. And then I also recommend with like labor costs, like you want to pull yourself as an owner into a different category. We have to do it anyway for people who are in entities, but you want to put, your labor costs separate from, say, staff costs. And then I even recommend a lot of the times, if you're really doing this modeling and trying to dial into performance, splitting those wages up between, like, well, okay, I've got two junior advisors who are servicing this amount of revenue apiece. Like, what is my ratio on that? So, like, if I bring in an extra, 10 million AUM next month, what's my labor efficiency on that? And my labor efficiency on me as the advisor, and my labor efficiency on my staff, and, like, is that something that I can be tracking so that as I'm growing, I know that, hey, if I bring 10 in, I'm going to be able to maintain a consistent profit margin on these. I can afford to pay somebody X amount to service this revenue and still be within the margins that I want. And just pre-planning that stuff, because sometimes I'll see people, they'll say, hey, oh, I need another advisor. And it's like, well, like, what's your current revenue per advisor? And, like, how efficient is that labor currently? Well, maybe instead of adding the new advisor, if it's gonna be, like, a really terrible margin because your product model isn't right, like, let's fix the product model first instead of having to incur all this training time on this person, and you're just bringing them into a bad model. Because I see that really often. A lot of times people will talk about, like, "Okay, how much AUM are you currently working with? Okay, how many households is this actively? How many people are servicing this? How much do you pay them? How much is revenue?" And it's like those relationships right there say a lot about the performance of the firm.
Yeah,
And really getting those dynamics really tight. That's going to be your best first investment if you don't have that data visibility. You're going to need your QuickBooks correctly set up in order to get that. You're also going to need to get external stuff to correctly set that, of like, well, how much revenue is each person servicing, um, et cetera. Like, those are things that you're not going to be are not going to be trackable in, like, a accounting tool, but they should be trackable, on the other platforms that you use.
yeah. Well, any advisors you work with that are spending too much on tech, I can cut their tech costs in half. Just just let me
There
know.
you go. All right, well, I'll send them your way, Joe. How
Advisors
much
spend way
how
too
much
much
should
money.
they do? Like, how much would you say, like, a normal solo, like, independent should be spending on software, like, as either a percentage of revenue or just like, an annual amount?
I talked to like a two advisor team and I mean, software on average is like $100 a month per user. Like if you
Mhm.
boil it all down, it's all like $100 a month per user. Um, they were paying for 20 different tools. So let's just say like 20,000 or 2,000 a month. And they were seriously not using 10 of them. So they were paying a
That's
thousand a
nuts.
month for tools that they were not using. I
Yeah.
mean, like well-known tools, like risk tolerance tools, holistic plan, like just tools that they feel like they'll use eventually, but they never actually use with clients.
Yeah.
There's just a lot of that going on. So
Yeah.
it's very easy, but they don't necessarily like it's very interesting because it's like, well, you're not using these 10. Why don't you just, fire them all tomorrow? And they're like, well, but we might use them. It's like, well, until you start using them, you're basically just giving them charity. So
Yeah.
why are you giving them charity?
Or it's like, "We use this for 2 accounts," and it's like, well, like, can you just build, like, a little Excel thing for
Right.
this instead that
No.
costs $0 once you build it? And a lot of times, like, internally on our side, there is a lot of tax planning software out there, it does not do what we need it to do for what we
Yeah.
do, and so we use a lot of Excel because it's just, I want this to come out a very certain way, I want this calculation to be worked through a very certain way, um, and so we build a lot of our own internal stuff just because I need it to perform in a very specific output, because the work is so technical, and, I think for a lot of advisors, it's probably similar, like, you've got cases where they've got quirks on them and, you're gonna have to do some custom stuff figuring out yourself, but, yeah, paying for stuff that you don't use.
Have you followed Andrew Argue's work at all? I think it's like
Yeah, I know him,
accountingandtax.com.
yeah.
Okay,
Yeah, he's an interesting guy because he doesn't come from a tax planning background professionally,
right.
so there's a couple of other tools out there like Tax Plan IQ, like Plan is one that advisors use. There's Intuit Tax Planner, which is not super popular, but I was part of some of the groups that worked on that. I find in general with the tax planning, a lot of it comes down to you have to have the technical acumen underneath it in order to even be able to do it well. Like a lot of
Yeah,
these tools, especially when it comes to tax, it's so technically complex. Like, oh, should you be an S corp or not? Question for advisors, and it's like, well, there's like four different things that we have to calculate and look at to get the answer to that. And then when you do it, like how you do it right, and what's the benefit, and is it worth it? And then you got to look at things like exit strategy of just, okay, well, if you're adding on junior partners every year, like we're not going to be able to do this because your distribution strategy is not going to work. So it's a lot of stuff like that the higher level tax planning kind of things where it's like, the ideas generation is helpful, but when it comes to the actual technical execution, because at the same time, if we're changing a bunch of stuff, we have to use better than just like, oh, well, this is going to save you 20 grand. It's like, well, actually do the calculation. Like, is it really going to save you that? And then, okay, if it does save you that, what does that change your next estimated tax payment?
right.
A lot of them don't do that kind of full cadence of experience, of the calculations that have to happen. So that's why we've just built a lot of stuff internally.
No, it makes sense. I like Corvi, I think is Andrew Argue's tool, but it like
Yeah.
inputs data and then runs it past like 120 different tax
Yeah. It's like we
scenarios.
just
But
have a
it
checklist.
right.
And then it's like, okay, here's the group of strategies that like seem like they might be a good fit. And
Yeah,
also like we know the advisor and know like, okay, are they gonna be able to handle having to do, like, these 3 other things that this is this a good use on their time too? Which that's another big issue that I see with a lot of advisors where they're like, "Oh, I wanna do the Augusta rule for my house," and it's like, well, the value of your time right now is about, like, $500 an hour based on how much profit you make and how many hours you work in the business. If this is gonna eat up, like, 10 hours of your time, I better be producing a better tax write-off than 5 grand, and most of
sure.
the time I'm not.
Yeah.
So it's not worth it. And I think for a lot of them, they can get kind of distracted by some of this tax planning stuff for themselves, when it's really just, no, you just have to be focused on running your firm, running it excellently, and growing it. That's where going to be your highest ROI. This function should just be humming in the background for you and, paying for itself because it's well engineered and, being efficient, but it should be in the background. It should just be humming behind you. It shouldn't be something that you're having to like actively fuss with all the time, which is what I see a lot of advisors having to do.
Yeah, no, for sure. Did you always focus on financial advisors, or is that a niche you kind of like worked your way toward?
Yeah, it's a progression over my career. So like I've always worked with advisor clients, since I started in tax, and then for me, like I launched this firm, I think over 6 years ago. We initially started with like a tax planning emphasis and then niched down to advisors when I realized I really like doing education. They like learning about this stuff. Also they get it and they enjoy the planning. And then I just found that nobody was really serving them efficiently. Like they've got some nuances and revenue recognition and some issues that face them specifically. And I just really enjoyed working with the advisor clients the best, and so that just ended up being our niche.
Yeah, no, it's good. I mean, that's my niche too, and I'm always thinking how I can like niche down more. So there's 300,000 advisors. There's 100,000 with the CFP. There's 3,000 with some other certification. So it's like, is there a way I can filter down to like these are the most aligned? Have you found a specific AUM range or size of business or specialty that most resonates with you?
So we're, I think we're pretty broad. Like the main thing that's the niche for us is having that planning orientation. So, the basic cadence of how I work with people is we start with an assessment and then we start with initial planning and then the relationship change, flips into actively during the year we do planning sessions so that we know what's coming at the end of the year, that we can be proactive with it, that there's a plan, that I don't have to do the hey, you actually have to write a check for 50 grand in 2 weeks emails to people. Like we've reverse engineered the services so that it's
Sure.
just it's better. But in terms of like the, specific clients that we work with, it's more just that they're looking for that kind of grade, that they just want it to work well and in the background, have it be proactive, have it be, as efficient as it can be in light of their other goals. Um, and then, in terms of their sizes, like I've got firms that, solo advisor, no employees, does $300,000 a year and we work with them. Other firms, $9 million a year top line multi-partner. Like it just really ranges. But I think the core that aligns is that, they just want the function to work well. They want to focus on their firm. And then we have just, the relationship is much more, I would say, because we understand the industry, it's a lot of like talking shop kind of stuff that goes on
Yeah.
of like, hey, what's, like what kind of CRM do you use? And like, who are you working with coaching? Oh, yeah, I know them. Like, it's a lot of that kind of thing, which, is what I really, I enjoy that part of it just as much as the tax work.
Yeah, no, that part is fun. This may be a good lead in to talk about LinkedIn, which we were talking about a little bit earlier.
Yeah.
Do you hang out on LinkedIn much, or what's your organic growth
Yeah, I'm on
strategy?
there and I always tell people like connect with me, like feel welcome to send me a DM. It's where I mostly spend a lot of my time. It's where I've met a lot of people and like, it's where we met. Like
Yeah.
I spend a good amount of time on LinkedIn because, I love seeing the posts that people put out and, I enjoy following the people that do marketing and just like all the stuff that, it's a coral reef on
Yeah,
LinkedIn.
no, it's fun. The past few months, I found the double bell feature, so I don't have to scroll the feed anymore. I just like double bell people that I want. I basically get notified every time they post, so then I
Yeah, I
can
do
just
that
like
too.
log
There's
in.
certain people, like
Yeah,
certain attorney accounts where I'm like, I wanna see everything you say.
right. Then you just kind of work through the list that you have notified, and you don't have to scroll the feed because the
Yeah.
feed is not always great.
Yeah, no, it's like and that's the other thing that I'm always trying to work on is, like, really making my content gear like, I have a little reminder on my phone at the end of every day. It's like, "What experience did I have today that would be valuable for everybody else to hear out?" Like, I
Yeah,
scrap out any client-specific things, but, like, "Ooh, this person had this issue like, made this big mistake. How can I frame this so that other people cannot have the same issue?" Or
yeah,
like, what was the mindset issue or what was the system failure or just whatever it is like that you just encounter during the day. And that's my daily habit is like taking it from actual client experiences. Like I'm doing a post about the one guy with the $100,000, you know, issue. And it's like, he had no idea that it was as bad as it was. The CPA didn't know, the bookkeeper didn't know. And why is that? Because there's no integrated system, and that was really why that happened. Um, so it's and that's also just why, like, this function is really important because it's you might spend a couple grand on tax prep every year, but, like, if you've overpaid by 100,000 because they messed up a bunch of write-offs, it's like, that's what you paid for tax prep last year,
yeah.
it's so, I at least with LinkedIn, that's been my attitude with it is like, how do I just make this a way to translate the experiences that I have into like valuable feedback for other people, so that they're not having the same issues or, it puts a red flag up of like, oh, like I have this situation, like I probably should look into this, like this could be a problem. So that's always been my attitude with it.
What's been your experience with like AI comments and AI posts?
It's funny, like, they seem like they stick out pretty easily. I don't know if that's gonna change over time or maybe I'm becoming, there's probably things that get past my radar that I think it was a human being and then it actually wasn't. But, I don't I really wish that LinkedIn would prioritize the content instead of, like, the way that the algorithm is programmed where it's just, like, how long people are spending looking at the post, and then, like, you have to do these, like, formatting tricks in order for the algorithm to even pick it up, and, you really have to focus on the hook of the post so that people will click the see more and even see the whole thing, and it's just such a game, versus it being just more based on, you know, people providing actually good information in a decent writing style out to, their communities of people that they're connected with. But,
Yeah.
LinkedIn's trying to make money. Their incentives are to keep as many people glued to the platform as long as possible versus I wish it was more, just focused on it's a platform for people with expertise to be kind of in communication with each other in their various areas, whether, you're an advisor looking for information or, you're someone who serves that community. It's like I really wish that it was more just like a knowledge sharing platform or like a community, like a circle group or something like that, rather
Yeah.
than, you know, how it currently feels.
Are you in some circle communities?
Yeah, I'm in a couple school community like this one. I'm in
School?
a
Yeah,
couple
we're
of
on
school
school.
communities, and I'm in a couple circle communities, for, like, CPA firm owners. Though I'm not in any for advisors. If there's anybody listening to this that is interested in having a CPA on their advisor-centric school group or school and or circle group, send me a message because 'cause I'm always trying to get more involved in those kinds of platforms, but I really like those. I've the circle groups that I've been a part of, I've found it to be really I'm not gonna ding LinkedIn. LinkedIn, I've found to be pretty collaborative, like, especially on this industry side, and it's really refreshing when people are like that, like, "Hey, I saw this post, like, I have a resource for you." Um, it's nice, but, on the circle communities, it's really different, like, it's got a very different feeling. I don't know if that's been your experience.
Yeah, no, for sure. I think communities have to really be nurtured. So, like,
Yeah.
I've started some communities that were pretty active, and then like they've just died off since I left or wasn't a part anymore. And I think that's communities are work. Like you got to keep
Oh,
people
yeah.
engaged.
Yeah, oh, yeah.
Um,
Well, it's you're taking people onto a separate platform, so there's so much attention that it takes
right.
to even just get people to log into a different platform, um, that it's just yeah, it's a lot of work to make them work, and it's a lot of work to make them valuable for people.
Yeah. I think those are going to be like the main two community platforms in this space, Circle and School. Circle
Mhm.
lets you customize your branding, which a lot of people are just really picky about their branding, but
Yeah,
School's user base and like web traffic and the speed at which it's growing is just like 10 to 20x what Circle is.
yeah.
Um, so I'm trying to get as many advisors as I can to join School, and then there'll just be like the network effect of that. Um, I think will be really fun, but we'll see.
Yeah, we'll see. Well, they got, school's got Alex Hormozy and, Sam Ovens behind it, right? So,
Yep.
and two powerhouses of acquisition, so
So it sounds like you work with firms like in the up to a billion range. A billion would be like 10 million in revenue a year. Is that about
yeah, I
right?
would say, like, most fall in that, if people are up above that range, like, we can still work with them. It's just oftentimes they're so complex, that they need, like, financial statement audits or, they've got private equity or other things where they're going to want, like, a larger sized CPA firm because it's a less integratable relationship, and then usually for firms that are of that size, they've got, like, an internal CFO who's able to handle a lot of the kind of planning functionality that's going
Sure.
on, so that tends to be the size, though it's not, there's if somebody came to me tomorrow with, like, a $15 million firm and didn't have an internal CFO, like, it's, it would be well within our, like, ability range, but it just tends to be on that smaller side, just, like, relatively in the whole population of sizes of firms, just because of those factors.
No, that's a good point. It's almost like the fractional industry. Like you don't up to a certain size, you like fractionalize all your C-suite positions, and then once you're over a certain
Yeah,
revenue,
and
you
then it's
just
all
bring them.
formal.
Yeah,
Yeah, it's just more
that's
efficient to
interesting.
bring it back in.
Good to know.
Yeah.
What else are you noticing in the world of advisors or accountants and how they merge?
A lot of people ask me about bringing tax prep into their firms.
Yeah.
It's a really common topic. It's something that, I always say, like, we're like sister industries in a way. The relationship and the competence that has to sit on the person doing the work is very high. Um, it's almost like cottagey kind of in a way, but when people are thinking about bringing tax into their practices, just being very careful to realize that you're now effectively bringing in like a whole other business into your business because of just the way that work works, the people who can do that work, you're basically now running two businesses in tandem with each other. So as long as people are aware of that and they've got people who can own the functions that are, able to really own the function. So you as the advisor are not having to jump in and manage like ops related to it. It can be a great value add. Usually for the firm owners themselves, though, like if they're just doing 1040 kind of returns, the owners themselves are going to be too complex to really rely on. Like I had a firm a couple months ago where they were basically wasting like 70 grand a year for how they were reporting something and then just other things that they were doing wrong. Like it was probably like ended up being like 100,000 they were wasting every year in taxes. And they had their internal tax person doing it who was used to doing 1040 returns, but not used to doing tax planning for like a multi owner
Yeah.
entity. So just making sure that if you do have that stuff in house, like being aware of, what your needs as a firm owner is going to be different from, the retiree 1040 who were just trying to do planning around capital gain harvesting and, um, you know, when they're doing their RMDs and stuff like that. It's very different styles of planning.
Yeah, no, that's interesting. I mean, the first advisor I worked for started as a CPA, and then he added the wealth planning side or wealth management side.
Mm,
It's a very easy sell because, like, when you're already trusting someone with the accounting for your business, like to say, "Well, I'll manage your accounts as well," is like
yeah,
super easy. But he wasn't very focused on the wealth management side, so like it
that's
wasn't
usually
getting
how it
managed very
goes.
well.
Yeah,
Um, so then it's like, well, he's a good accountant. He's a terrible financial advisor. So they're like getting good service here and really bad service there. So it's an
yeah.
interesting dynamic.
Usually whichever one's the one that gets added on is like it's like the ugly stepchild, like it doesn't get the attention that it needs because the
Yeah,
person who, where the business started, that's where the technical acumen is usually and where the passion is because if you're a financial advisor, like that's where the passion is and you're like, "Oh, well, we'll just throw in the tax returns." And the other thing too that I also warn people of is that, you take on a lot of liability when you start doing people's tax returns too.
sure.
So just making sure that, a lot of people will do them as like a loss leader kind of thing, just to keep the relationship and keep it holistic. But you are taking a lot of liability. It does create a lot of operational drag. And if you're not able to make the function efficient enough, it creates a lot of operational drag without producing enough revenue for the firm.
Yeah.
So it's just being mindful of all of those things and just being intentional about it. I see some advisors where they've added on the tax and then they're trying to do a good job with both. And so it's really just slowed down the progress of the firm because now in order to have people in the firm, you have to, they're trying to bring on one or two juniors. And it's like, well, are you going to be having them do tax returns too? And it really, it really just slows down their growth because they're not able to just focus in one lane. So that's, that can be the challenge as well. Like if you're just a solo person thinking about adding it on and like trying to do it yourself, it's, it might feel like a win because you're going to keep more of the revenue in and then it feels like a better experience for the clients. But if you're trying to grow the firm up to a certain size to really make it functional enough that it's not completely dependent on you, which is in the best interest of your clients,
Right.
like if you get sick, all of a sudden your clients aren't going to be served if you're a solo. So building it up to a certain size where you're able to have that redundancy of yourself as the main person, I think is important. So there's a lot there.
There was no. I think it's. I used to. So side story. I used to do construction, and I had a remodeling business, and we would do like bathroom remodels and roofs and decks and drywall and painting and all kinds of things on a house. And at one point, my like operations manager was like, "Why don't we just do roofs? Like
Yeah.
we have all these different tool sets, all these different skill
Yeah.
sets. Like you would
Just do
make
one.
so much more money if you
Just
just
do
do
one.
roofs."
Yeah. And
Um,
then you can track it and then you can get better at it, right? Like if
yeah,
you're doing roughly the same jobs every time, That like and like this is kind of from the beginning of the conversation, like if you simplify down what you're doing, then it becomes trackable, then it becomes comparative because you can say, "Hey, we did these 10 accounts and we run them through this standard system." And yeah, there's going to be some variation like this one has this many accounts and this much AUM and this one has less. But then you can, like, track performance, which is, a lot better than, "Okay, we're dealing with, like, multiple service lines and multiple things." Well, that's just gonna be too much for me to track, and then I'm not gonna be able to see where the constraints are in the business because I'm spinning way too many plates. So that's
Yeah.
another mistake I see people make.
Simplify, niche down, specialize. It feels like every single business conversation comes back to these topics. They're
Yeah.
good ideas. They're good ideas.
Yeah, it's niche down in order to, ultimately be able to really own the thing that you do and be able to deliver it really well.
Yeah.
It's like it makes it a way better experience for the clients, way better experience for you, way better experience for your staff because, it just the efficiency that you gain with not having to shift attention everywhere, it's such a big lever.
Yeah, for sure. Do you have clients that maybe are like lifestyle advisors that are not really scaling? And then do you have others that are like looking to exit in a few years? And so they're like trying to get everything off their plate they can?
Yeah, we get both, and a lot of the time, and I've got people too where they're trying to do acquisitions, um, other people where, I would say the majority of people who work with us are kind of that lifestyle practice, but wanting to be efficient and wanting to grow. Like
Right.
not super aggressive, but just want things to function well. Want to know that they're doing what they should be doing, and then just that there's a good plan in place and that it's not an unknown. Because if you markets up and you grew by 20% over last year, okay, did your tax liability grow by 20% or did it actually grow by more because of where you are in your brackets? So it's a lot of that kind of thing. We work with both, depending on what people have going on.
What do you typically see firms that are growing really quickly? What are they doing well in the marketing department?
Um, I would say for the ones that are growing really fast, like of the ones that I'm working with, having a really specific niche has made a huge difference. I've got a couple in mind where like they have a very specific niche of who they serve and they are growing really fast because of it. And then I would say probably the bigger piece for the ones that grow well, um, it's not even like a marketing thing. It's more just the mindset of the owner that they're not trying to be, they're building systems behind them and then focusing more on what the higher leverage activities are that they should be focusing on. So, getting up out of the weeds of the client engagement. It's like the book, The E Myth. Like it's a lot
Yeah.
of that kind of thing, where it's just, find your unique place of genius, completely focus on that. Out, have everything measurable so that you know that the systems are performing, that you're not, directly overseeing. And then from there, it's just a matter of like lean into your genius and, make sure that you've got these feedback systems between like your financials and KPIs that you set up that that the rest of the things that you've handed off are working correctly. So,
No, that makes sense. I think with niching down, it's like you just start resonating with people faster. There's the
yeah.
amount of trust
Sales go
builds.
really fast. You're
Yeah.
speaking to them individually. It's like
Right.
I used to watch a lot of, Russell Brunson, if you must have come
Yeah.
across him too, yeah. Like, a lot of his stuff, like, it's, you have to call out a specific person, really know their pain, and if you solve their pain really well, you don't have to like, the sales aren't hard, the just it makes the whole system work easily because you are providing value, because you are solving a particular pain, um, and you're doing it kinda at scale because you're solving the same pain for similar people, so you can do it efficiently.
Yeah. Yes, you mentioned Russell Brunson, Sam Ovens, Alex Hermosi. Did you start like looking into these online business creator type people at some point?
Oh, yeah, years ago. Like, I was aware of Alex Hermosi when he was still in, like, gym launch days.
Okay. Wow.
Um, I found how did this all get started?
I think Andrew
Well,
Argue came out of Sam Ovens'
he's a Sam
early
Evans,
group.
yeah,
Yeah.
yeah. So, yeah, no, I've been aware of these people for quite a while just because I don't know, I'm a curious person and it's interesting. Um, and then also just as a CPA, we're trained to be very technical professionals. And I was finding over the course of, I've worked in various roles, like in public accounting and for publicly traded company, and nonprofit accounting and some small businesses and things like that. So I've seen like a very wide range of business types. Um, and a lot of the main thing I was finding with like my fellow tax professionals and fellow CPAs is like we used to be like the doctors of business and we're not anymore. Like we're not.
Yeah.
But we should be. Like we should understand like how marketing systems work and how how you should be tracking employee performance and how you should be setting up your ideal client profile and like you should be holistic and then how it all relates back into financials so that way when stuff is going wrong you're like actually this is a niche issue. Like that's ultimately what the issue is here. It's not any of these other things that are masking it. It's like let's get to the root. But you really have to be, I don't know. That's why I've gotten so interested in those kinds of people. I think especially out of any of them, I really like Russell Brunson, but I really enjoy Alex Hormozy's work,
Yeah.
just because like he is across the different disciplines. Like him and his wife, like she does really great work as well, more on like the HR personnel ops kind of side. Um, but it's I think it's part of the reason why I do what I do is like I just wanted to grow as a person too. It's like,
Yeah.
it's easy to run a lifestyle kind of thing, be a good technician, carve out a little space for yourself in the economy and then just kind of coast into the sunset. But at least for me with running a firm, like it's actually a challenge in personal excellence. Like that's what I'm trying to do.
Yeah.
Getting the tax returns filed correctly and accurately and the great client experience, like that's the fruit of that. But like the real end game is the like just wanting to be really excellent, and that's
Yeah.
I think businesses is a particularly good cauldron for doing that. For trial, entrepreneurship is a good trial by fire for doing that.
Yeah. No, there's some fantastic Substacks called something like business is the ultimate self-help or something. Cause like
Yeah,
it's the best way to become a better
it
human
is.
being.
I
Yeah.
think so. Well, because it forces you to face reality in a way that a lot of other things are never going to do. It's like,
Right.
you know, um, like you really have to prove your worth. Like it's not, um, you know, you don't get a lot of slack cut the same way that you can kind of be mediocre in most other things in life, and you're never going to get a reality check in business. If you're mediocre, like you will get a reality as a as a firm owner, like you will get a reality check eventually.
Yeah.
Um, so that's why I do what I do. It's like it'd be easy to clock in and clock out, but what's the point of living if that's
No,
all you're doing?
it's true. I something that super bothered me anytime I was an employee was like the most raise I could ever expect to get was like 3 to 6% per year. And I was like, I want to 10x this year. Like, how
Yeah.
can I 10x as an employee? It's basically impossible.
Well, and that's something that I give a lot of thought about because, like, the model of what I'm trying to build is really make, you know, get it incentive aligned where, like, if you have people that can grow the business in the way that it's supposed to grow and do that correctly, it's like, man, why are we just making the structure set up where it's me as the employer have all the risk of downside if this staff person is inefficient? It's
Sure.
me as the employer who's on the hook for the salary if they're just kind of, checking in, kind of checked out at work versus they get very little of the upside if they meet the expectation. Like that's like the worst of both worlds.
Yeah.
So that's something that I've been giving a lot of thought to recently. It's like, well, how do you align incentives um to, allow that upside participation,
I think every human being, whether they're a 1099 or a W-2, should view themselves as a entrepreneur because if you work for one client, which is like your full-time job, or you work for 100 clients, as a contractor, you're still running a business for yourself. You're just giving all your time to one company or many
Yeah,
companies.
100%.
Um,
No, I totally agree with that. I think it's the attitude of self-agency, right? Of
right.
like, I'm the master of my own fate. I'm not dependent on, you are gonna be like as an employee somewhere else for other people's performance, but, really coming into the situation with like an ownership mindset. It's if you treat the work like that and it's not just, "Oh, this is what I'm being asked to do," as the thing grows, if you're working with people who are, aligned with you on a personality perspective and, their values and everything, it's like, yeah, like you will naturally be able to get into those conversations of like equity ownership or like, hey, if I can do this to this, like, can I get a percentage of the upside that I'm making on this
Yeah.
for the company? And like being able to have those conversations, but you kind of have to like this has been my experience doing this previously at places, like, you kinda have to show, though, that you're already there to get that chip at the table,
Yeah.
but most people who are running businesses, like, that's what they want, like, that's what they want people to do. Um, it's just there's a lot of people who own businesses who aren't, you know they're good technicians that have been, like, promoted to owner when in reality, like, the skill set is really just being a good technician, which is different. So it's why you can run into issues like that.
Last question. Have you considered charging basis points?
It's funny, like, I think about kind of what we're doing as a firm, and I'm like, "Oh, eventually it'd be great, like, if we just get" first we're doing the tax planning, and then we get really good at the consulting because we've been under the hood for so many practices and, like, really in the weeds with the owners, and then eventually get to a point where it's like, "Ooh, could we start doing something that's like, more incentive aligned and just level up, like, what we're doing?" But,
Yeah.
for now, it is what it is, but we try to make sure that I'm always thinking about that. I think it's not a Warren Buffett quote. It's a Charlie Munger quote. It's like, show me the incentives and I'll show you the outcome. And it's really true. And you always have to be thinking about that. It's like, how are these incentive structures set up to actually get us to where we're ultimately trying to drive towards, which is value generation. And most of that is
Right.
performance based compensation rather than just like, hey, you're going to pay me this whether or not I do a great job or whether or not you experience a change. Like it's like it's like the employee employer relationship. It's like it's a lose lose, but it's easier. It's easier to come up with that structure than performance comp. It's you have to have good data to be able to measure it. You have to set standards. They have to be mutually agreed upon.
Yeah.
uh, and both people will have downside, both people will have upside, and they have to be okay with that relationship. So, it's something I give a lot of thought to.
Yeah, you should take like the Schwab compensation survey and like design new compensation structures that have all this baked in. That would be kind of cool actually.
Well, people have to have the good data first, which that's usually the first
Yeah.
hurdle is just actually having data clarity so that you can tie it to, you can tie things correctly. Because a lot of
Right.
times it's just they don't even have the visibility to even know like who are our most profitable clients. Like, most people don't even like, they're like, "Oh, maybe these ones because they pay us the most." It's like, "Well, do you track how much time it spends like, how much time people are spending on them?"
Yeah.
Until you have that, like, you don't know what your labor input cost is, so you don't know, So a lot of it's like we're just dealing with really fundamental data clarity, which just requires tracking, and then once you get there, it's like, "Okay, well, then now we can start to say, like, okay, if we budgeted you for 10 hours on this engagement and you're way under and you brought in more AUM, like, okay, like you beat the benchmark, right?" But
Yeah.
most people is like, we don't even have benchmarks.
Yeah. Yeah. Well, we're getting closer. I think data's gonna get more accurate and we'll
I
have
think
more
so.
time. AI
Yeah.
will free up time to like work on some of this more fun stuff.
Yeah, that's the goal. That's a good use for it.
Cool. All right. Well, thanks for coming on today. If someone's interested in connecting with you, where should they go?
Yeah, you can find me on LinkedIn, Catherine Tindall, CPA. I'm pretty sure I'm gonna be the only person that shows up with that name. And send me a DM. I'm always interested in to hear, what people, you know, uh, give me the hot takes if you disagree with anything I said. I'm always interested in getting other opinions. And then also if there was anything that, stuck out and you have questions about it, just feel welcome to reach out.
Awesome. Sounds great. I'll point people there. All right. Thanks. Talk to you soon. Bye bye.